Cash flow is the lifeblood of any successful business. Without reliable and consistent cash flow, a business can find itself struggling to meet monthly overheads, and the problems can quickly escalate from there. If you're finding it difficult to pay your bills as and when they fall due, this should be a warning sign that you may have a cash flow problem. Left alone, cash flow problems are only likely to get worse. However, there are steps you can take to turn the situation around. This may involve taking out a form of invoice financing, giving you immediate access to some of the money tied up in unpaid invoices. This can also provide an element of long-term certainty when it comes to your cash flow going forwards, particularly if you're in an industry where late payments are common. If cash flow problems have already started to cause your company to fall behind in payments to your creditors, you may need to consider restructuring the business. This can be done either through formal or informal negotiations with creditors. You may be able to come to informal arrangements with your creditors on an individual basis. This will often depend on the level of debt involved, your ability to repay, as well as the strength of the existing relationship. Alternatively, a company voluntary arrangement is a formal and legally binding insolvency process which aims to lessen the monthly overheads of a company, while still ensuring creditors receive a portion or all of the money they are owed. If you are experiencing cash flow problems, you should make it a priority to seek the advice of a licensed insolvency practitioner. The sooner you take advice, the more options will be open to you and your company. We will be able to undertake negotiations with your creditors, including banks, finance providers, and HMRC, on your behalf, working towards a solution which will take you back from the red and back into the black.